Contents Forward. Preface. Acknowledgements. Chapter 1. The Making of a Value Growth Investor. The Common Journey of New Investors. Short-term trading to long-term investing. Growth investors. Value investors. Value investors versus growth investors. Value growth investors. Warren Buffett's journey. Value growth investors. Definition of growth companies. Common misconceptions about growth companies. Why value growth investing. Summary. Chapter 2. The Secrets of Successful Value Growth Investors. Healthy thoughts lead to sustainable results. Summary. Chapter 3. The Jigsaw Puzzle. 4 Pieces to Value Growth Investing. The Jigsaw Puzzle Model. The Art and Science of Investing. Looking for the right information. Information released by the company. Information from outsiders. Summary. Chapter 4. Business. The first piece of the puzzle. Understand the company's business model. Simple business. Circle of competence. Going beyond the limit. Competitive advantage. Knowing the competitors. Think like a customer through the scuttle-butting process. Finding future growth drivers. Understanding risks. What can go wrong. Summary. Chapter 5. Management. The second piece of the puzzle. Management forms the cornerstone of a business. Criterion 1. Trustworthiness. Criterion 2. Candid in reporting. Criterion 3. Aligned with shareholders' interests. Criterion 4. Track record experience. Criterion 5. Visionary managers. Summary. Chapter 6. Numbers. The third piece of the puzzle. Numbers do not lie. Numbers to look at when reading the income statement. Numbers to look at when reading the balance sheet. Numbers to look at when reading the cash flow statement. Summary. Chapter 7. Valuation. The fourth piece of the puzzle. The valuation of a stock. Price to earnings ratio. Price to earnings to growth ratio. Discounted earnings model. Margin of safety. Summary. Chapter 8. Screening by monitor sell. Screening using numbers against competitors. Buy, monitor, and sell. Buy, and buy. Monitor, and monitor. Sell, and sell. Summary. Chapter 9. Portfolio management for growth companies. Understanding your portfolio. Types of diversification. The sky is the limit. Summary. Chapter 10. Avoid common mistakes. The dos and don'ts of investing. Summary. Chapter 11. Case studies and conclusion. Bibliography. About the authors. Index. Cover images. Magnifying glass. Burazon or Getty Images. Bar charts. Eric Dreyer or Getty Images. Cover design. Wiley. Copyright 2013 by John Wiley & Sons Singapore T. Ltd. Published by John Wiley & Sons Singapore T. Ltd. 1 Fusionopolis Walk. #07-01. Solaris South Tower. Singapore 138628. All rights reserved. No part of this publication may be reproduced, stored in a retrieval system, or transmitted in any form or by any means, electronic, mechanical, photocopying, recording, scanning, or otherwise, except as expressly permitted by law, without either the prior written permission of the publisher, or authorization through payment of the appropriate photocopy fee to the Copyright Clearance Center. Requests for permission should be addressed to the publisher, John Wiley & Sons Singapore T. Ltd. 1 Fusionopolis Walk. #07-01. Solaris South Tower. Singapore 138,628. Tel. 65-6643-8000. Fax. 65-6643-8008. Email. inquiry@wiley.com. Limit of liability or disclaimer of warranty. While the publisher and author have used their best efforts in preparing this book, they make no representations or warranties with respect to the accuracy or completeness of the contents of this book and specifically disclaim any implied warranties of merchantability or fitness for a particular purpose. No warranty may be created or extended by sales representatives or written sales materials. The advice and strategies contained herein may not be suitable for your situation. You should consult with a professional where appropriate. Neither the publisher nor the author shall be liable for any damages arising herefrom. Other Wiley editorial offices. John Wiley & Sons, 111 River Street, Hoboken, NJ 07030. USA. John Wiley & Sons, The Atrium, Southern Gate, Chichester, West Sussex, PO 198 SQ. United Kingdom. John Wiley & Sons Canada Ltd. 5353 Dundas Street West, Suite 400, Toronto, Ontario. M9B6HB, Canada. John Wiley & Sons Australia Ltd, 42 McDougall Street, Milton, Queensland 4064, Australia. Wiley v. Ch. Bosch Stress 12, D69 Weinheim, Germany. ISBN 978-1-118-56779-1 Cloth, ISBN 978-1-118-56795-1 EPF, ISBN 978-1-118-56797-5 Moby, ISBN 978-1-118-56798-2 EPUB. Forward. After reading this book, you might come away with the feeling that Victor and Rusman have seriously pounded Singapore's pavements in search of value growth companies. Not only have they traveled East Coast Parkway to Changi Village and back to the Central Business District scouring for value companies in Singapore, but they have also been out to Woodlands to check out its industrial zone. Bottom-up investing is all about discovering a company's value early, getting its stocks well before the crowds, and exiting hopefully with a profit as mainstream investors move in and push up the valuation. Typically, these sorts of opportunities are found within second and third line stocks rather than well-known blue chips. It is a long-term strategy that requires discipline and patience, on top of a robust system, to have a reasonable chance of success. Despite their differing backgrounds, Victor and Rusman have merged paths, and value investing has become their common identity. In my opinion, it takes guts to write a book in the first place, but talent to write about a process that has merit and can be empirically tested over time to add value. This book provides for an entertaining read that takes you through a system that, if followed closely, should help you identify quality stocks and reject unfavorable ones. There is, of course, no guarantee that following this system is a sure recipe for instant riches. However, it certainly provides a comprehensive check that would help you avoid investing in dud stocks and steer you toward those with solid fundamentals and decent re-rating potential over time. After reading this book, it will serve as a ready-to-use reference. The techniques outlined herein are timeless and can be referred to over and over again as you make progress in your investment journey. This is an enlightening read, and thoroughly enjoyable for those interested in learning about value growth investing and starting their investing journey. Digby Falconer, former Indonesian research director at Deutsche Bank, former regional research operations head at Societe Generale Private Investor and lead trainer for Millionaire Investor Program Advanced. Preface. Value investing has been one of the most consistent and proven methods of generating wealth over the last century or more. The third richest man in the world, Warren Buffett, who has made value investing his lifetime passion, is worth $46 billion. You don't have to be like Buffett, managing billions in the spotlight. A lot of ordinary people with ordinary jobs are perfectly happy quietly making millions through value investing. They are your quintessential millionaires next door. It makes sense. Spend less than you earn, save diligently, and, when the opportunity comes around, invest cheaply in great companies that will grow in value many times over the long run. It's a safe, logical formula to long-term financial security and success. You don't have to be a superstar athlete, movie actor, or tech guru to be financially free. Anyone with a normal job and the diligent application of value investing can retire with millions. While value investing is traditionally associated with investing in well-established companies, in this book, we'll show you how you can further increase your investment returns by value investing in smaller growth companies. Investing in growth companies does give us some lucrative compounding rates, but it also requires us to possess the appropriate knowledge to invest in these companies, as these investments can be risky. This book is meant to help you achieve the same success that we have had with growth companies. In doing so, we would like to impart a step-by-step process as to how to value these companies with little risk and still be able to generate 15% compounded returns annually. We know you picked up this book because you want to learn more about investing in growth companies. Whether you are a seasoned investor or a newbie who wants to learn about value investing in growth companies, this book is for you. With a growing global population, increased life expectancy, rising standards of living, and affluence, more and more will be spent on consuming new products and services. They're fueling the world's economy every year. However, The economy is subject to fluctuations. The booms and busts of economic cycles are inevitable, but new millionaires are created virtually every cycle. There is no better time than right now to get yourself on the road to riches by buying something that is going to be worth more money 10 years from now. Let us share with you a brutal fact. If you place your money in a bank, you will be earning interest that is lower than the average inflation rate in most countries, be it in Indonesia, Malaysia, Singapore, China, or Thailand, where you will effectively lose value on your money. Instead of doing that, an alternative is to invest your money and allow it to compound over the long haul. All investors have a common aspiration to enjoy a good return on their investment. But how do we identify investment strategies that can consistently beat the market? One of the greatest things about investing is that there are numerous strategies that investors can deploy, ranging from technical charting to fundamentals analysis. Different techniques produce different sets of results, each with different risk levels. When there are profits to be made, there are risks involved. It is highly dependent on the investor to choose the right strategies that yield the most consistent returns with the lowest risks and yet be able to outperform the market in the long run. Rusman Ng's journey. Like many of you, I dreamed of becoming financially free. When I was just 8 years old, I promised my parents that I would make big bucks and buy them big toys, like bungalows and sports cars, someday. Seeing how ambitious I was at a young age, my parents were delighted, but took my promise with a pinch of salt. Soon after I graduated from secondary school in Indonesia, my sister and my mum decided to send me to Singapore to further my education. Arriving in Singapore at the age of 15, I felt very foreign, as I could not read, write, or speak English or Mandarin. That did not stop me from studying hard to better cope with the education system in Singapore. Over the years, I occasionally have flashbacks about the promise I made to my parents. Driven by a desire to become financially free, I decided to take action and began to learn how to grow my wealth in order to fulfill my promise to them. I read Rich Dad Poor Dad and Rich Dad's Cash Flow Quadrant by Robert Kiyosaki, books I strongly recommend to those who want to transform their lives. Through these books, I learned the mindset of successful people and identified my cash flow quadrant, a conceptual tool used in those books. From then on, my life changed, and I started to seek active ways to become financially free. In my bid to learn more about investments, I attended preview seminars for trading, such as options trading and foreign exchange trading forex. Very often, these programs appeared very promising, as they seemed to be offering a way by which to become rich within a short time. But as I was a student who did not have much money, I never enrolled in the courses. Looking back, I am glad I did not. I realized that the only way for me to learn about investment was through traditional methods, so I went to the library to read about candlesticks, a method that was developed by the Japanese for those who wanted to become experts in trading. However, I could not comprehend how one could predict the future, for example, market movements, just by looking at technical charts that are based on historical prices and volumes. Also, it was too daunting to have to memorize all the terms used in the candlestick chart in order to arrive at a decision as to whether a sign is favorable or not. Soon after, I discovered that legendary investor Warren Buffett was once a trader who tried to master so-called technical analysis, a technique which he later found to be worthless, and that had cost him about 8 years trying to master it. Inspired by his story, I decided to give up what little trading technique I had acquired and directed my focus toward value investing, abiding by the saying, if you want to be the best, you've got to learn from the best. I began to read all the books I could find about Warren Buffett's strategies. Initially, I went through a slow learning process with no tangible returns on my investments. However, I started to learn much more when I took action and attended Millionaire Investor Program MIP, a course conducted by Ken Chi and Clive Tan during August 2009. Victor Cheng's journey. Financial news of a reported Singapore Straits Time Index STI crash from its peak of 3,241 points in 2008 to its lowest level of 1,456 points in March 2009 caused the value of almost every stock price to dip as never before. The financial crisis of September 2008, caused mainly by U.S. subprime mortgages, impacted many investors, but fortunately, not me. With the onset of a financial crisis, I had a gut feeling that it was the perfect time to invest, because I, like many others, Abide by the investment philosophy of buying low and selling high. At one point, I was glued to the screen of my laptop every single day, with hopes to catch the bottom of the Singapore Exchange Traded Fund ETF index cycle before it recovered. Then my instincts were telling me to invest all my money in it. However, I was confronted with the fear that prices would continue to fall after buying into the fund. My emotions ran wild and I was more confused when the index plunged further. I knew I did not possess the knowledge to evaluate the stocks, and thus had no choice but to stay out of the market. One day, it suddenly dawned on me that I was once told that the third richest man on the planet earned his fortune purely by investing. Intrigued by how this man landed his fortune, I did my research and learned that the person was Warren Buffett, widely regarded as one of the most successful investors in the world. Warren Buffett, as I had gathered, used the investment technique commonly known as value investing. By November 2008, I was reading books about value investing and doing my best to understand value investing concepts. However, I knew that I needed a mentor who could impart the right skills to me in order for me to shorten my learning curve. With that intention, I started browsing newspapers and the internet, with hopes of finding a mentor. There was very little to be learned about value investing, as most investors were vested in trading. In my heart, I knew that the wealthiest people, a very small elite group, are rich because they do things differently from everybody else. In my heart, I knew that I had to do things differently to reap extraordinary results. With this belief, I steered my investments away from the vast majority of investors out there who were traders, while I continued my search for a befitting mentor to guide me on my investment journey. In March 2009, I was reading the newspaper when the term value investing in an advertisement caught my eye. Without hesitation, I made an inquiry about the advertisement and booked my seat for a preview session. After the preview, I was convinced that the course was what I had always been searching for, and decided to sign up for it. Called the Millionaire Investor Program MIP, a course taught by Ken Chi and Clive Tan. How we met. The power of MIP was what brought us together. After the course, we embarked on our respective investment journeys. What was good about the program was that it allowed us to have unlimited reviews. As a result, we volunteered to be logistics helpers to add more value to new participants, while we continued to build our own knowledge of value investing. We met each other when we were part of the logistics team and realized that we have the same philosophy of investing in fast-growing companies or growth companies that grow at more than 15% per year in terms of revenue and net profit. With this common interest, we formed a mastermind group that mostly focuses on unraveling growth companies, conducted monthly. Our masterminding group provides us with a platform to unearth high-potential growth companies listed in Singapore Exchange Limited (CGX) and place them on our investment radar. At this pace, our investment momentum is kept going. While we provide each other mutual support throughout our investment journey, we also get to conduct scuttlebutting, a term used by Philip Fisher in reference to carrying out investigations on the ground as a team. A concept that will be explored in a later chapter. For now, let us just say that we used scuttlebutting in January 2010 to unearth the potential of a company called Design Studio Furniture Limited, an interior design company that grew at a compound rate of more than 30% per year in revenue and net profits from 2005 to 2009. We realized that its fundamentals were quite sound and that it consistently generated high free cash flow for the previous 5 years. However, we were concerned about its valuation, as it was overpriced, and there was not enough margin of safety at $0.66. We decided to place this company on our radar. Our patience was soon well rewarded. On May 2010, Design Studio announced that they were in a lawsuit with a Dubai company for alleged breach of contractual obligations. Mr. Market, a famous metaphor created by the father of value investing, Benjamin Graham, had a huge mood swing and slapped the company hard. Its stock price plunged from $0.6 to $0.45 within a month. Upon learning about this, we immediately revalued the company and found that we had a margin of safety of 50%. Based on the assumption of 0% growth rates, we made an appointment with the management to learn more about the lawsuit and found, at the end of it, that the lawsuit did not have any impact on its business. We concluded that the business appeared to be in a temporary crisis, not a long-term entanglement. As a result, we started purchasing Design Studio at $0.45. Within 2 months, it rose to $0.6. increasing by more than 40% from our purchase price. While we were writing this book, Design Studio announced that they had won the litigation case, although that was the first stock we had bought since the inception of our mastermind group. It was not beginner's luck that we had nailed a good investment. Instead, it had to do with what we had learned from the program. As long-term investors, we have learned that time is in our favor and that patience is what is needed to become successful investors. Thereafter, a food and beverages F&B company we uncovered was Japan Food Holding Limited, a Japanese restaurant with compound growth at above 20% per year in revenue and net profits from 2006 to 2010. Its fundamentals were sound. We even visited their point of sales in Indonesia. To our surprise, their franchise outlets in Jakarta, Indonesia were doing extremely well, even during non-peak periods. In Singapore, most of their outlets were doing pretty well when we visited them. In August 2011, we started purchasing their stock